Yeah, thank you very much for the introduction. I'm glad to be here. There's a similarity from me and the first two speakers. I think all of us, we have 3 kids, if I'm well informed. But the difference is I could walk here. So I didn't have to fly in from California or from South Africa. I'm very fortunate to be at the University of Frankfurt. The beautiful campus is essentially just around the corner. And I'm happy to be there for quite a while, working as a professor for electronic commerce, so focusing on everything that's related to the internet, and also working for the e-finance lab, where we focus on the impact of information technology on the financial service industry. You already got introduction to the first 2 speakers. We have 2 more panel members. I heard you are kind of pop star. Everyone is waiting for you because at the Federal Financial Supervisor Authority, everyone would like to hear your view. So Jean-Pierre Bußalb is here, and we have Johannes Pfeuffer from BörseGo, and the second name is Guidants. So you called yourself the Democrat of the data, making the data available to everyone. So before the pop star takes over, I thought that you add a couple of thoughts on what might be exciting innovations we see in the financial service industry, in particular on innovation and trading.
Yes, thank you very much for the introduction. I'm very pleased to be here and to be part of that panel. Let me start with an apologize maybe. In the first panel of today, we had some speakers with a Swabian accent. I have a Franconian accent, which might be even more difficult to understand depending on where you're coming from, but I will try to minimize that accent so everybody can understand me. Yeah, I was asked before the panel to share some thoughts about the 2 presentations that were just held, and let me shed some light on 2 interesting terms that were part of the titles of the presentations. The first is social, and the other one is 4.0. And in the internet sector, I don't know if you ever heard of the term. A term was created about a decade ago. It is named Web 2.0, and that term has been created in order to distinguish the classical internet, where there is only one communicator sharing his information with the crowd, to a new type of internet where there are hundreds of communicators who communicate with each other, who act with each other socially. And what we at BörseGo have observed in the last years is that even though this term Web 2.0 is more than a decade old, a lot of information in our sector, which we are discussing here today, is still being provided in a rather old-fashioned and a rather classical way. As a matter of course, that can also be explained by the fact that we often have to deal with very sensitive information, but in general, the way that the information is being presented is rather classical. And what our mission was and still is we are trying to change that. We are trying to create a more effective process of providing information from one channel to another, and that's what I think we have achieved with our Guidance platform, which is now 3 years old, but the company that stands behind it, BörseGo, is 15 years old. So we have more than a decade of experience in the information providing for the financial market sector. And we are very experienced in that. And in another panel of today, I've heard that Frankfurt here is unfortunately lacking of very well experienced, very good front-end developers. And I'm more than pleased to say that fortunately we have those developers. And the result of the excellent work that those developers have done is our Guidance platform, which has been selected among the 50 most promising fintechs of this year by FinTech City in London in the April of 2015. Yeah, and basically our aim is I've already said that, to make information more available, which means provide information in real time wherever this is possible, make information more social, which means put an emphasis on the network character of information, and make it, and that's the most basic principle, make it more democratic, make it available to a lot of people, because we believe that a certain level of information is the very basis of a sustainable trading and investing. So
Mr. Bußalb, lower prices, more data, anything wrong with that?
Yes, good question. Well, first of all, perhaps I'm not a pop star, but here am I, well, as sort of a devil's advocate, because I wanted to show you, well, let's say the downsides of all this FinTech world. And you told us in San Francisco that there are clouds in the sky, there is growing skepticism on FinTech. Well, perhaps I rather share this view, but let me just start with one point. There is no ongoing supervision of all the platforms we have in Germany. There are exceptions when it comes to FinTech as a whole, but crowdfunding platforms are not supervised by BaFin. When it comes to crowd investing, crowd lending, it's a little bit different. But I think this is a downside, that there is no unique supervisor, no unique German watchdog over all the FinTech world, especially concerning crowdfunding. What is the disadvantage of this? There are other FinTech enterprises, the so-called startups, that use these platforms, these marketplaces, and they usually avoid a prospectus. They eschew all the disclosures that delivers a prospectus. I'm coming from the prospectus world for non-securities. I've been doing this business for 15 years now, and I think prospectus gives you a great advantage. It's a liability document. It offers you a lot of disclosures when you read it, if and when you read it. I think every consumer should read it, and all these disclosures are lacking in the FinTech world. Well, above all in crowdfunding platform marketplaces. There I can observe another downsides. What are the parameters of due diligence? For me, it's often a black box. I don't know how do they choose, how do they select the startups that later on can use this marketplace, can offer their idea, their product to retail investors. Are there conflicts of interest? I don't know them. There's no legal obligation so far to give transparency when it comes to conflicts of interest, due diligence, consumer protection as a whole. Then, unfortunately, there's a certain fear of, first and foremost, crowdfunding platforms when it comes to dealing with BaFin. They shun us. When you don't get them at the phone, lack of proficiency, when they have to hand in their information sheet, often, not always, it's full of printer's blunders. The warnings are written not in an accurate way, so we have to be after them so that they correct it. This takes a lot of time. They blame it on time pressure they have because the startups are pressuring them into handing in their sheets to us. So a lot of confusion. I think this is sufficient for a start.
Okay. Probably my kids would told me you don't get them on the phone because you should use other messaging services, but probably that doesn't solve all the problem. So Robert, what can the supervisory authority do to, on the one hand side, make sure we have some kind of protection, and on the other side, we make sure that we get the innovation done here? So from your point of view and your experiences with social trading, what can we do to kind of find a good balance?
Yeah, so I think what's really important is the increased level of communication between the supervisors and the FinTech community, and that has started. I was very happy to see that, for example, some of the colleagues are also here. Today we've been invited to the Ministry of Finance a couple of months ago, and there was a discussion on the needs of fintech companies. The Bundesbank was there, the BaFin was there, and there was a discussion on how, first of all, the good guys and the bad guys can be kind of like detected. Okay, so I think there's a little bit of skepticism. Potentially, if things are not regulated, then there's the chance that there's a lot of bad guys around. So there was discussion on how can we kind of like isolate those bad guys. And I think there's a lot of, we exchange a lot of ideas. I think, if you in a dialogue with the people, then you can judge yourself whether it's a good guys or bad guys. Also, I think looking at the investor side, if you look at fintech companies and see who actually invested, who are actually the lead investors in those fintech companies, I think it's also a very big differentiator because obviously the due diligence process, highly regarded investor would also involve the regulatory side. Well, that's what is at least the case for us, for ayondo. So the regulatory side was always very, very important. So actually, personally, I can't really complain. We are in a dialogue, and we are properly regulated. And if we are not properly regulated, we are working on adjusting this as we speak. But I think the problem is really, as I mentioned early on in my speech, that you've got a traditional framework and you've got traditional licenses and setups which might not fit all the new business models. So there has to be some adaptation from all sides, I think. And sitting at the round table together and discussing this is a great step forward, I think.
Do you agree?
Yeah, more or less. I have to admit I have a great experience with BaFin and Bundesbank as well. They helped me to found a bank in 2008 within 6 weeks. They were very supportive. We only bought last year BIW. When we filed in other documents, within 3 months the deal was closed. I think that's record time. So if you present your docs in the right way, if you know what you are doing, you can deal very professional with the regulator. However, I agree with you, sir, what you've said about young fintech startups who are not really familiar with how to file the docs, how to complete with processes. And maybe a solution could be that I'm not always looking to UK or USA. However, fintech is much further developed in those countries. And the tailwinds we see today is a bit coming from the US as well as the UK. And over there, they've introduced a couple of years ago a kind of agency which is between the industry, the fintech industry on one hand side, and the regulator on the other hand side. You could call it mediator, consultancy, whatever you want to call it, but they help to find out whether applications might make sense and there's a likelihood to succeed. And if not, it's good news sometimes to know rather pull the plug fast as opposed to waste your time for 6 or 12 months not leading to a good result. Or if you have to complete this and that, then you succeed faster. So I think that could be a great idea to help. And I also had a meeting with the Minister of Economies here in our state of Hessen, and I know that all the stakeholders are quite involved in the fintech scene, and that they all are keen to support, and that they all are look for help and ideas how to speed up the process. Because at the end of the day, we want to make sure the talents who are here in Frankfurt or in Berlin working within the fintech industry will not move to the States or to the UK. And on the other hand, we are here in Frankfurt, financial hub for Germany, which is undoubted, and ECB also is here in Frankfurt. However, if you look at the talent market in the financial services sector, it's great in Frankfurt, but if you look at the tech talents, you hardly find them because they rather are in Berlin or Munich or somewhere else. So we need to create a more attractive place for those people. And we as FinTech Group, for instance, we are working on an initiative where I want to introduce a kind of dual study program, which is called FinTech, so that people learn both financial services, banking, what Robert is doing, what we are doing, as well as what the tech side is, in order to comply with the future requirements of young people in order to find a good and decent job. So I think that is quite important. Yeah.
Yes, I agree with you. Well, I wanted to make it clear that BaFin is in favor of FinTech. Well, in my speech I singled out, black sheep, but I want to give you an example. What BaFin is already doing, I'm in the BaFin working group FinTech, and we want to revamp our website in order to provide more guidance, more information for startups, for FinTechs as a whole, as well as for crowd investing, crowdfunding platforms. I think in the course of next year, in spring, you can see the result. Our homepage will have, further category concerning this. What we cannot do, and I heard this throughout the day, we have not that approach FCA has. We do not foster, it's not laid down in our statutes, we do not foster competition. We have to take another stance, and this is, the first step is to revamp our homepage. If you guys have any questions, you can address me, you can send me an email, and either I can answer it myself or I can forward it to the incumbent person. Regulation is one side, another side, and I wanted to stress this, is self-regulation. Perhaps in order to, when it comes to the younger ones, to the youngsters in the FinTech world, perhaps a code of conduct or self-regulation would be a first step, or another chain, another echelon in the chain, to present themselves more professional, to get that proficiency that is still lacking, and I have to highlight this among younger firms. Third point, BaFin is, as you stressed, involved in this dialogue. But in order to attain later on a European passport, FinTech itself has to do its homework, to improve on its organization, to have the competent persons that as an interlocutor with BaFin and so forth.
Okay, so we learned that mediator might be one approach to kind of solve the problem. The second one is self-regulation. And of course, the third one, that's why we are all here, directly contact you to speed up the process, to reduce the information uncertainty. How about you? Do you think that something like a self-regulation could solve the problem, or will that still create lots of other problems?
It's not that easy for me to comment on that, because we are neither a bank nor a financial services provider, but I will try. Let me first say some words about what we've just heard from the other members of the panel here. I can only agree that the search for very talented developers and other persons working in our industry is getting more and more competitive. And on the other side, customers of ours get more and more demanding. They ask for more and more advanced solutions, which is their best right. And we can only do to fulfill their needs as best as we can. But this takes a lot of hard work and a lot of good people. And therefore, I can only say that moving forward with a mediation process or a closer dialogue between the authorities and fintechs is a really good step in the right direction. But you were asking me about a code of conduct, if this may help to improve the situation. Something I could say that we are basically something, we have some kind of code of conduct applied on our platform indeed. We are some kind of social network for the financial markets, and what we've done here is, as a matter of course, every participant of our platform has to confirm certain rules, what to do and what not to do, just as he does before joining other social networks that all of you know. And on the other hand, what we haven't done yet is allowing each and every customer of our platform to share his personal opinion with each and every other customer of the platform. We wanted to create some kind of expert network, and the thought that stood behind this idea was to hold some kind of control over the platform on our side, because as I've already mentioned, we are in the business since 15 years. So I think I could say that we are very experienced in dealing with financial market information, and we are very experienced in providing financial information to the customers. And so this has been a very important step for us to assure that the clients just get the information that are really useful to them, and to avoid an information overflow or the provision of information which is not relevant or even disturbing. So that's what we have done right now, and yeah.
Okay.
Can I make a comment on
Of course.
self-regulation?
Yeah.
No, I think it's a very, very important point, because it raises the profile against the regulator, and it enables to speak with a shared voice, like a common voice towards the regulator. And I think that's an extremely important element. For example, in the industry I am in, our business is based on a wrapper called Contract for Differences. And we have got a association, a CFD association in Germany, which we launched a year ago or so, relaunched a year ago. We are a member of that association. There are several banks and brokers are members of that association. And we have also developed a code of conduct. So where we, in between us, we say, this is what we communicate to the outside world. This is how we treat customers. No matter what the law says, this is our standards. We set the standards, right? How we deal with complaints, how we deal with certain things. And that's extremely important. And I think that should give the regulator a lot of comfort. So we are big believers in this.
To the customer,
the customer
the clients.
as well. Yeah, both sides, yeah.
So, but for you, that serves as a raw model what they have done.
Yes,
Okay.
of course. Yes, it's a first step, or perhaps a first main step towards improving organization, competence, and so forth. Because as an investor, you want to have a good feeling. You want to be provided with adequate information on the websites concerning the startups using crowdfunding, crowd investing platforms. And for me, I reiterate it, it's often still a black box. You have smart, nice, fanciful videos with very beautiful people. The product, it's wonderful, it's great, but what are the risks of it? There's a general risk disclaimer. I think each and every crowdfunding platform has this on its website. But for me, as a regulator, when I see it with the eyes of a watchdog, it's not enough. I wanted to go more in depth. I want to know the details of an investment. Who is the borrower? Are there are there guarantees that I get my money back? What's the product behind all this fuss they make of it? So it's a first step, as I mentioned, self-regulation, and perhaps in order to bridge this information gap between a prospectus that is lacking in this field and what you have on the crowdfunding platform, it's a first step. So you can lay down in the self-regulation a minimum requirements of disclosures.
Okay, so I think it's pretty clear that you have to be the devil's advocate, that you have to protect the consumer, but I think we already found some ways to improve that. First of all, the personal communication, that's why we are here. Secondly, maybe a mediator. Third, like the self-regulation, we found an example. So I think there are lots of opportunities. What I would like to focus in this discussion also on is more on the disruptive ideas. And I heard your idea about cash payment at a much lower price, at a much faster speed. So I would say this is disruptive, but I was looking out for more ideas about what is really disruptive in the area of investment and trading. So I'm looking out for more ideas beyond your very nice example. So what is really impacting investment and trading in the future? Silence is not a good answer.
Maybe I can start.
Okay, fair enough.
In accordance with what Robert has said, social trading and following trading, I think it's in itself disruptive. And we work with a client who's offering also social trading and following trading, but the next level is that, for instance, in your business model, and correct me if I'm wrong, you identify trader number 1 or Peter or Sarah, and you like their performance on a weekly, monthly basis, and you say, okay, here's €1,000, 300 goes to Peter, 300 goes to Tom, and the balance 400 goes to Jerry, and then you hope, Tom, Dick, and Jerry, sorry. Then you hope that they will perform, hopefully, as good as they did last week, last month, or whatever the reference period is. Yeah, that's great. Next level is that if you want to find out why the performance was so good, you can online be linked up with a coach who then explains you why Tom was better than Dick, and Dick did better than Jerry. So that's another way of following trading, so that you have an element of learning or finding out what the reason behind is. I think that's a great idea.
It's interesting. I mean, because I believe exactly in the opposite. I think that customers are maybe not that interested to dig too much into the why and what and if, right? I think customers want to have simple solutions. So they want to click and they want to invest in the best possible. So and not question it, right? So I think what the next level of really evolution is on our side is to take all the data. As I was saying, last month we did 3.3 million trades. So there's a lot of data over the year. There's 30, 40, 50 million transactions. There's a lot of intelligence you gather. There's a lot of, we call it big data, right? And you can actually use that to form intelligent wrappers, intelligent products, which kind of combine several traders, combine several strategies, kind of build sort of indices. Right, similar to an index.
So there would be the Tom, Tracy, Dick index, just the weighted average or something like that.
It would be the best, for example, the best of ayondo index. So people don't have to, go and track 1,000 traders and look at 1,000 traders and ask why have they done it? Because people, quite often don't have the expertise and don't have the time to do that. So they want to have, a good automated, statistically based solution.
Okay. Maybe if I'm allowed to add, I think there's no right or wrong. If you look into the audience here, there's many people I would assume who drive a car and have no clue how a car is built and what's the inside of a car, and that's good. And I agree, there's a lot of clients who don't care. They look at performance. Oh, they did well last month. I do the same. Hopefully they will do it again. If you look at the panel here, starting with Devil's Advocate, as well as a professor, and maybe I'm not that educated as all of those, but a bit, we of course want to know yourself. I know you want to know as well why you're doing well if you go short here and long there. So at the end of the day, in Germany we have 80 million people. There's of course clients who drive cars, don't know how to build a car, must not necessarily know how the engine works and so forth. And then there are of course guys who like automotive vehicles, like me for instance. I like 8-cylinder, I like this, I like that, I want to look into it. Sometimes I even care about quattro drive, 4-wheel drive, whatsoever. So at the end of the day, I think you need to build products and services for the right clientele. And then again, when I look at the regulator, whenever it comes, do clients have a clue of what they do, or do they have a chance to know better? I know you are in favor of the latest, and I agree with that.
let me ironize. It's the fastness, stupid. Well, the fastness is the problem. It's often the problem because a consumer can click here, can click there, and can buy many things, can invest as fast as he can. And we, or BaFin as a regulator, well, has to build in, sort of protection, has to make sure that every customer may be well informed about the product he or she is buying, and internet makes it all very fast, but that's the problem.
I know that you have to stand on the brake, but
Yes,
could you
but
still share with us what you feel is a disruptive innovation, or is this beyond?
I have also to read the complaints that reach me after the fact, that reach me after a fraudster has carried out his business. I have to answer to an 80-year-old lady, and that's the truth, I mean it, that calls on me, how can I get my money back, and weeping on the phone. And well, you have to tell her something, why we could not do anything about it, why the platform could have carried out this business. You have to explain to him or her why the business flopped. You have to explain to her, or you have to ask her, why did you buy this thing that did not fit you? So this is the downside. Throughout the day, we all had a wonderful world depicted by all the firms and the fastness and the glamour and the glitz of FinTech. But I have to heed to these people that hopefully that have been damaged, that have to carry away with the have to incur damage. So yes, that's I wanted to make this point to stress it once again.
Okay.
Yeah, maybe to please the moderator is another disruptive idea. We look very deeply into credit facilities we want to offer next year, and we are looking into micro lending, consumer lending. So when it comes to big data, as Robert has mentioned, there's those things called visual DNA, where people try to assess the big data in a way that from sending out a questionnaire, you like blue and yellow, how are you filling out your tax claim, you have a driver's license, yes or no, that you withdraw from those data conclusions in order to improve your decision-making process, which is built in an algo, whether you give a credit or not, and whether it's likely that the credit will be paid back on time or not, so in order to reduce default rates. Yeah? And there's a lot of scientific stuff out there, not each and everyone will apply, but those are things who will disrupt certain processes, because at the end of the day, you want to lend as much as possible in accordance with the rules and regulations, of course, but at the same time, you want to keep your default rate as low as possible. And in order to improve this, FinTech and those aspects can help.
I think, Bernd, there's a lot of disruptive models around already, a lot. And there's new ones coming out every day. And there's no right or wrong, don't get me wrong. Yeah? So there's obviously a lot of different ways you can make a successful business. But I think the power is going to be in combining a lot of these services, you know, in smart applications, so via the mobile, right? So if you ask me in 10 years' time, you're going to have very powerful mobile devices, much more powerful than now. You're going to have faster, more secure internet. You're going to be able to transform, I don't know, 1,000 times more data in a millisecond than you could do now over the mobile, and that will enable to give you a complete different customer experience. And so there's going to be a lot of disruption on the customer experience, the way the customers consume services. And I'm sure there's going to be a lot of combination of services in one service and displayed via or accessible via the mobile phone. I think that's where the next step is going.
Okay, but we're getting towards the end. I still would like to have one final question for every one of us. If we look ahead in 10 years, and in 10 years when my kids will be around 30, so the question is, what will be the kind of trading and investment behavior that my kids could pursue in 10 years from now? You want to start? Okay.
Well, yeah. I think there will be a market shakeout. There will be market adjustments. It's not up to BaFin, to do this, because some business models will flop. Others will getting more proficient. Hopefully, getting more proficient. I think the FinTech. There will be a European passport for FinTechs. And those who survive, well, they deserve it. They did their homework and will be getting more proficient.
Okay, what do you think?
I think that Robert has said something really interesting when he was talking about mobile devices, which are getting more and more heavily used by the customers, and I can only say that that's what we are seeing every day when discussing with our customers. When I look at my sister, which is 10 years younger than I am, her communication behavior is totally different than my communication behavior, and it's just a decade between us. And I think it was back in the year 2008 when we first brought real-time information on one of our websites. It feels like it was back in the 90s, because nowadays it's completely normal that you are getting the exact amount of money and exact the information you need right when you need it, wherever you are. So it's getting more and more a normal situation, and I think that transition that we're already experiencing in this information provision area is continuing. And yeah, what the fintechs simply have to do is always keep their eyes open at new technologies, on new ways of communication that I'm pretty sure of that will establish within the next years. And I think they need to adjust to those new forms of communications. They have to have a broader view, not only on the financial sector, but on other areas of web communication and even on the normal communication that happens between a person and another person, because those forms of communication will be transferred to the web as well. So I think that's a really important step to get a broader view of forms of communication, how they will be transferred. Will they get even more fast than they already are? Because what we have to say is that a day now has 24 hours, and the day will still have 24 hours in 10 years. But the channels that are available to customers to provide them with information will continue to grow, and they will multiply. And so it's getting more and more important to reduce the channels, or if that isn't possible, to reduce the amount of information to a degree which helps the client to sustainably invest or trade. And I think it's a lot of work for companies like us to do, but it's very challenging, but it's also very interesting.
Okay, in 10 years from now, apart from Frankfurt getting a German championship in soccer, what else is going to happen?
Champions League, 5 times Champions League winner in 10 years' time.
Best with 2 teams.
No, but coming back to your picture, I think your kids are going to sit there with a mobile device, right? They log into their application via some social network. Might be Facebook, probably something else, which is 10 times bigger than Facebook is now. They will be able to compare different platforms, get the best ratings, choose the one. They'll be able to get education on demand. They'll be able to get research on demand, and all in that one little application, and then they make the choice, and that's 24 hours real time with no cost. I think that's trading in 10 years' time.
Okay, my answer is twofold. One conclusion I brought back from South Africa is the fintech industry will help to create a bank for the unbanked, because there's people out there who are not that well educated, not so sophisticated, they don't have access to all those things which are normal to us. So I think that will help, and this is part of internet and fintech industry. And here in Europe, for sure, it will not take 10 years that we have the mobile bank. And this goes to what my colleagues have mentioned already. The clients want to have access to their banking services 7/24, and they don't want to depend on a location. So whether they're on holiday, whether it's weekend, whether it's day or night, they want to be able to access their accounts, they want to key in transactions, they want to put a trade into the system, and then they don't care whether it's midnight, so tomorrow morning it's going to be executed. So this aspect of having a mobile bank, that's going to happen and will not take 10 years for sure.
Okay, so lots of ideas. Let me just add what we are doing at the university. Of course, we are trying to educate people, but also with respect to what we call data science or what you call big data. So nowadays, you can really observe that over the last couple of years, we increase the amount of data that we make available to the students, and we ask them to analyze the data. So nowadays, we set up seminars where we give them 2, 3, 4 gigabyte of data, and then asking them, okay, try to get some information out of the data. And if I make a prediction for the upcoming 10 years, that this kind of education will increase. So I'm pretty confident, at least with respect to data science, big data, we can deliver, hopefully, the experts that you need. Apart from that, I hope that this discussion was inspiring. Thanks a lot, in particular to you, to be so open-minded and try to find a good balance between, on the one hand side, regulation and going on the break, and on the other side, trying to make sure that we get the innovation done here in Germany. I think this is particularly important. And thanks to all of you again. Thank you.